All right. Today's SPY was up 1.03%. And I still think if you're paying attention to the price on this chart, this is a very, very simple chart to trade. And I will do a quick reminder, my preferred scenario is that we're back on our way higher off of this support at 548. And as long as we're above 548, I do think it is a good idea to stay on this bull because this is a bull trend in a bull market. And we do have this gap to fill above here at 562. And I do think from there, we could even make a brand new all-time high. But for now, let's stay focused on the short term. And in the very near term, the bulls will need to break through 556. So I like to view SPY right now as a range between 548 and 556. Bulls need to break through 556 to get to 562, and the bears need to break down below 548, and then we'll be looking for 542. Remember, this is a bull trend, so even if we are going lower, I still think it is the best trade to buy the dip at support levels, but you can do whatever you want. Just keep in mind, if you are shorting, you will want to manage your risk if the bulls break through 556, because above 556, we could go all the way to new all-time highs right around 570. So if you're still bearish, you're on the clock because above 556, you're no longer bearish. And if you want to be bullish, you have a ton of support below to work with. It's a bull trend until it's not. And that means the easiest trade and the highest probability chance to win is still the long trades. On the NASDAQ 100 triple Qs, we were up 1.49% today, so a very strong bounce off of this support zone right around 473, which is also the rising 50 EMA. And I also think you could view this as a range between 473 and this -5 EMA right around 483, so a nice $10 range here. And if the bulls continue to push higher, we're looking for a test of 491 and a gap fill at 493. And then above that, we have a bull breakout, and we're likely going to brand new all-time highs right around 507 and 511. Now, if the bears take over and we get rejected from this resistance zone and we break down below 473, then you're looking for that 100% guarantee gap fill at 468. And remember, we have no idea when that gap will fill, so there is the chance we go all the way to new all-time highs and then fill that gap later in the year. But I am very confident before this year is over, we will see that gap fill. So it is going to be a very important support to pay attention to, especially if we break support here at 473. But right now, I still think holding above support means buy the dip. I would not worry about that gap fill. That's just more of a buying opportunity if we go lower. And you cannot be fearful of a bull market going lower. That is where you should be getting your low risk long entries to get those high reward and low risk entries. So we have very clear risk levels. Whether you're long or short, it does not matter. But if you're bearish and we start to break through 491, I think you would be a fool to stay short, because then you're just going to get short squeezed all the way to new all-time highs. On the Dow Jones, we were up 0.3% today, and once more, I will remind you, I am very bullish here. I don't think a lot of people trade the Dow Jones, and it does move pretty slow at times, but this is a very solid chart, and as long as we can hold above 398 to 400, I think that is a very low-risk entry to run all the way up to 415 and then 420. I'm very confident the Dow Jones is going to at least 415, but I'm also very confident it's going to 420. But again, that will take time, and that's likely going to take us out through August. And in the short term, we could pull back just a bit more towards support. But again, it is a bull trend, so there's no reason we need to expect it to go any lower. I would definitely focus more so on the long side and get those low risk entries at support. On the Russell 2000 IWM ETF, we were up 1.59% today. And after closing that gap and going a bit down below it, we did find support today with a very bullish looking candle. And we did close at 220. And from here, it's possible this is our higher low and we're going towards a price target at 228. So you could just buy the dip and manage risk above 215 to 216. Knowing that if we break below that, we will likely fill a gap at 211. So even if we made a lower high and went down to 211, I still think that's a buy the dip, because I am very confident we are going to see this price target at 228 throughout August. And that means you could be focusing on accumulating swing positions for that price target higher, knowing the risk and reward to the downside. On the ARK ETF, we were up 2.21% today, and this is a theme I will continue to remind you that this is a risk on sentiment if ARK is looking bullish, and you can see we have the full bull trend. Price action is above all the moving averages, and we did likely put in a higher low here above 45.7, which means we could be well on our way towards 50.7. Now, you could trade this if you want to, but more importantly, it's a good indication of risk on sentiment, which means the small cap growth sector is likely going to continue higher, which matches my analysis that IWM is likely going to 228 or higher. On the VIX, we were down 9.75% today, and I will remind you one more time, as we're bouncing off support, I expect the VIX to crush down towards 13, and I am not changing anything about this analysis unless we actually do break down through critical support in the indices, and so far we're bouncing off of it. So I'm looking for the VIX to continue to crush as the market continues higher, and I do think that is going to be a theme we'll see for the rest of the week. On Bitcoin, we're currently trading above 67,800, and we did hit the price target. We did break through that resistance, and above 67,000, there is a good chance we push to the top of the range at 71,400. And then above that, we have a brand new all-time high right around 75,000. So stay bull above this breakout at 65,000, and that is a great risk level if you're bullish in Bitcoin. On Nvidia stock, we were up 4.76% today, and I will remind you very quickly, we have this gap to fill at 124.58, and as you can tell, that gap fill is now imminent, and it's likely going to fill tomorrow. And from that gap fill will be another very important decision for this stock on whether it is going to go higher towards the top of the range in the 130s, or get another lower high rejection right around 125 to 126, and then continue down lower towards 115 to 107. If we break through 126 to 127, it is very likely we're going to the top of the range at 134 or a brand new all-time high in the 140s. So this is a very important test for Nvidia stock, and we're going to be there as soon as tomorrow. On Tesla stock, we were up 5.15% today, and as you can see on Friday, we broke out of this wedge, and it looks like below that wedge, there's still a good chance we're going down here towards 231. So this bounce today is bullish back above all of the moving averages, and we did hold this support at 244, which is increasing the probability this was just a quick false breakdown before we go higher towards 289. So the best way to trade Tesla is use this risk level at 244. And if we break down below 244, it will look like we are going down towards 230. But if we hold above 244, this will just look like a quick bear trap before we resume the bull trend, which we still have a bull trend here. And the sign of the bull breakout will be the break above 255 to 257. Above that, we push to the top of the range at 264 and then 274 and then the gap fill at 289. Now, also keep in mind, earnings is coming up on Tuesday after the bell, which is tomorrow, and that will be a huge catalyst on whether we go to the gap at 230 first or the gap at 289. I never suggest trading earnings. If you're going to hold through it, make sure you're a long-term bull. Never ever trade earnings on a guess. That is not a good discipline strategy for good risk reward. On Apple stock, we were down 0.16% today, and I still think this is buy the dip above 218 and above 222, which is the rising 20 daily moving average, and I still think we're going to 232, and then above that, I think we will go to all-time highs in the 240s. So buy the dip above 218, very simple trade plan. If we break down below 218, it's okay to get risk off and look for lower prices. So jumping back over to the S&P 500, just remember this is still a bull trend until it's not. All we had was a very modest and very mild pullback as we got that sector rotation. And now that the sector rotation is likely complete, it is possible that all sectors continue to rally together. And we see an everything rally as this bull market broadens out and we get stronger market breadth. So do not be bearish just to be bearish. We need a damn good reason to get bearish. And the first thing we're going to need to see is price action breaking through critical support zones. Right now, we are in very low risk buy zones, and that is why the bulls took over today. And it is possible we've already seen the higher low and we're going right back to all-time highs to finish up the month. So no matter what you're doing, make sure you have a very solid plan. Make sure you're prepared for both scenarios, and remember that the bullish scenario still has the highest probability. The highest probability in a bull trend is that prices continue higher and pull back to higher lows before making higher highs. So hammer that point home into your head, and that is the only way you are going to continue to be an objective price action trader. You cannot ignore bullish price action while you're in a bull market. That is the time to get those low risk entries during pullbacks, and then be patient and allow the trend to do the rest of the work. If you're day trading, just be very disciplined and manage risk and don't get caught on any biases. We are absolutely destroying this market in the Stocks Channel Discord server. So if you want to come destroy this market with us and get access to all of my trade ideas, my technical analysis, and my intraday updates, that is in my Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. This is a very fun market to trade while it's very volatile, so now is a great time to be part of the Discord community. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.